Okay, let's close this a second here. Okay, well, I'm signed in on two computers. That way I can make sure I know what you're seeing. But it is December 3rd, Saturday, December 3rd. I was supposed to play golf today, but it's raining and it's windstorm, and I'm getting ready for the Friars to play URI. So this, if I can't play golf, the second best thing would be to make a accounting video for you guys. This is on bank reconciliations from Chapter 8. So that's what I'm going to do. So, of course, you'll be able to pause this recording. I am going to go over problem P7-5A. Okay, I'm going to do it pretty quickly. And here we go. I'm going to share a whiteboard that I pre-populated. I don't know that, hopefully you can see it all, but I will talk, I'll talk you through it anyways. So, like with all my reconciliations, I start out with the balance per the books and balance per the bank. And that's as of May 31, and that information is given to you in the problem. Number one in the problem, the statement included a debit memo of $40 for printing of additional company checks. So the presumption is that's already been debited in the bank account. So you have to record it in the books. You haven't recorded in the books yet, so it's a $40 deduction from cash. Anytime you adjust the book balance, you need a journal entry. Number one here, it's debit check expense and credit cash. Easy peasy, right? Number two, we recorded an error. We had a recording error. So we had deposited $883.15 in the bank, but the journal entry we made was for $933.15. So we recorded too much cash, $50 too much cash, presumably, and reduced AR. But the cash is going to be debit cash AR. We did it for $933, should have been $883. So we have to reduce the cash in our books, $50 to correct the error. The way we do that is debit AR. Reinstate the AR and credit cash from 50. Okay. I'm not sure what that arrow is there for. Three, we had outstanding checks of $276.25. So those are recorded in our books already. They're checks that we've recorded in our books in mail, but they haven't made it all the way to the bank yet. Whoever we sent them to hasn't cleared them through the bank. And so the bank's balance is too high. So we take $276.25. We reduce the bank balance. When we have something over in the bank column, we do not do entries for that because we do not keep the books for the bank. Similarly, deposits in transit of $1880.15. Those are items that we've recorded as cash. So we would have debited cash and credited AR, but the deposits haven't been processed yet by the bank. Okay, so we have to add that to the bank balance, $1880.15. No entry, again, that's on the bank side, so we don't make entries on those side. Now on to number four. We issued a check for $685, but we posted it for $658. So we made a journal entry for $658, but the actual check was $685. So we have to adjust that. So we have to reduce cash by 27 more because and we have to reinstate the accounts payable. So the presumption is when we're paying cash here, it's paying off an accounts payable. So we're going to debit accounts payable and credit cash for 27. Okay. The next one, number 5, we collected a customer who had owed us a note. We collected that. The bank collected it via electronic funds transfer, EFT. So it's already reflected in the bank's balance. We have to add it to our balance. Then we do $26.90, and we have to do a journal entry for the collection of that. Debit cash $26.90, credit notes receivable $26.90. Now this is a simple example. It could have been that the principal they were paying was $26.90. And they had some interest. Let's just say it was 10 for simplicity. So they could have given you $2,700, debit cash $2,700, credit the notes receivable for the principal of $26.90, and then credit interest income from 10. That's not what they had here, but you could see something like that, okay? Number 6, the bank has a similar sounding customer to what our name is. Our name's in this case is Timmons, and the bank has a company called Tommins. So when the check came in, they accidentally posted it to our checking account. So we call the bank, and then they figure out they have to add it back. There's nothing we have to do because this was just the bank's mistake. So there's nothing we have to fix on our books for that. Okay, we call the bank and say, hey, why'd you deduct 360? And they said, oh, because your name was similar. So they added it back. And then finally, on number 7, we received a NSF check of 380, not sufficient funds. So someone sent us a check. They named this Sarah Ballard, but she didn't have enough money in her account to pay for it. So while we recorded the cash, debit, cash, credit, accounts receivable, we will later find that the check wasn't any good. So we have to reduce the cash because the bank won't deposit that because they can't get the cash for this. So we take out the cash and we reverse the entry. So initially, when we thought it was good, it would have been cash 380, debit cash 380, credit account receivable 380. Now we just reverse it. Okay, and then those both balance. I don't know if you can see that far down to the bottom, but they both balance at 8931.90. Okay, so it's about 423 right now. This is the second time I did this because something went wrong technically. So hopefully I don't have to do it a third time because I want to sit down and watch the PCURI game. And of all the games that we need to win, this is a big one to win. Not necessarily for NCAA purpose, NCAA tournament purposes, but because I'll catch a lot of grief for PC loses to URI. I'll catch it from my wife's brother went to URI and some of my friends that went to URI. And I much prefer giving grief than receiving grief. So that's it. Let's go Friars, and we will see you on Monday morning. Take care.